Good morning, everybody. This is the live market open for Tuesday, January 26th. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show for FX Street as every morning. Today we have, as usual, we're going to talk about markets, what happened recently, and we had a turn to the worse in markets. We're going to discuss some charts and levels and the next 24 hours. Of course, if you have any questions, please just ask them on the chat box. If you cannot see the chat box, please go to the address on the screen, https tlk.io/fxfree-forex-live-video. Okay. This more or less tells the whole story. Okay, the mood dampens. We had a few good days of rallies in stock markets, stronger oil prices, stronger other commodities, stronger commodity currencies, stronger pound, and a weaker euro and a weaker yen. This risk on. This lasted until yesterday, and then we began seeing oil prices fall back down once again. And then stock markets, especially this morning, we had the Chinese stock market close over 6% lower, and that tells you everything that you need to know for stocks. Okay, so sorry for currencies. Okay, so let's start with euro dollar. Euro dollar was hit here by Draghi, fell to support here at 107.80. 107.80 is becoming stronger support now because it's now some kind of double bottom. Okay, we've seen it drift towards these lows also afterwards on late on Friday, early on in the Asian session on Monday. But since then, it's been going up, especially this morning. So 108.62 is the current level, 108.74 is the high, 109 is resistance. A stronger euro this morning. Not a huge move, but that's the trend. A stronger move is seen on the Japanese yen. So we have dollar yen already made it nearly to 119, and now it's falling back down, 117.80. Support, I see it at 117.30. Followed, the line in the sand for the BOJ, as we've learned, is 116. 117.30 is some kind of support. Okay, so stronger yen. Also on speculation, if the BOJ will really act or not. There are so many mixed messages and so many analysts saying different things. For the yen, it's in general, what we have is that the BOJ gave us a hint last week that it doesn't like what it sees in currency markets. Okay, the central government, Prime Minister Shinzo Abe, said in Davos that this might be the time for the Bank of Japan to act. On the other hand, we heard from the Bank of Japan that we might not see any kind of move because it looks at a different measure of inflation, which is actually more positive than what we see. Okay, and some analysts say maybe not now, maybe in April, maybe not in April, maybe in the second half. So there's lots of uncertainty. Anyway, the Bank of Japan meets early on Friday, and that's a big source of speculation. And we have the Fed beforehand. Let's go back to other currencies. I want to see here a question. Dollar ZAR, the South African rand, SA Reserve Bank will act and resolve if price is resumed stemming from Reserve Bank left to interest rate. Okay, yeah. South African rand, like many other emerging markets, emerging markets currencies has been falling. Okay. Because of the falling commodity prices, and this causes, of course, higher inflation at home. So they might raise interest rates to fight inflation, even though it can hurt the economy. Okay, so it's sometimes important to have one eye exactly on the South African rand, one eye on the ruble. Well, we only have two eyes, but just to look a bit at these currencies because they're also indicators. Okay. Let's move to the currency that moves most by oil prices. Of course, it's the Canadian dollar, 143.03, just a bit higher on the day. Not on the day, it's not huge, but we can see how the pair made this bowl-shaped V, if you wish, this U pattern here, and bottomed out just above 141. It's already 2 cents higher Then the lows currently battling 143, 144.40 is resistance, followed by 146 and 147. And I would say that support, not as strong as it used to be. Perhaps this line here, 142.25, could work as support for dollar CAD. Good morning, everybody. Aussie dollar, when Chinese stocks fall, so does the Aussie. Again, not a huge move, but we're back under the levels we've seen beforehand. 69.42 is the current level. There's some support here at 69. 68.30 is a very strong line of support. 70 is a round number that should be watched. Again, the Aussie, well, may perhaps not only a small part of the move happens today, but it already began yesterday. This turn down in the atmosphere, this more damp mood in markets. Okay, same thing with Kiwi dollar, a bit more resilient perhaps. 64.50 in the middle of the range between 64.25 to 64.65. Yeah, sort of a more narrow range for the Kiwi. 65 was the line it managed to rise above, and we have 63.50 as low support over there for the Kiwi. Okay, dollar Swiss, well, in range 101 to 101.50 more. 101.80. Remember that the Swiss National Bank moves the Swiss franc in tandem with the euro, and now we're seeing a stronger euro Swiss. Maybe there's more intervention. Remember that when money flows out of emerging markets, it flows into safe haven currencies. The Swiss used to be a very strong safe haven currency. It's not the case anymore, but it's still a strong currency. It sees inflows, especially when also from Europe. Okay. Anyway, currently we're just under 110. Euro Swiss has gone up from this 107.60 line in the sand to higher level, perhaps due to intervention, perhaps not. Okay, Euro Pound. Euro Pound exactly reflects risks. Risk. Last week, Carney did his carnage, sent the pound down. That means Euro Pound went higher. 77.40 is resistance. Then we had a better mood in markets. Draghi promised to act in March. It was risk on once again. Weaker euro, weaker yen, stronger pound, stronger commodity currencies. We fell to 75.40, something like that. Since then, we're back up 76.44. I would say resistance there is at 76.70 or 76.60. Euro yen, very stable. It's the safe haven pair. These two currencies move in tandem. So Draghi did manage to hurt the euro, but it was only short-lived, and then it's back to the range with the yen, back to trading together on risk on, risk off. Currently, it's risk off, but for this currency pair, it matters a bit less. 128 is the current level, more or less in the middle of the range between 129 or 128.75 to 127. And pound yen. Okay, also here, we had the big crash in the pound and the stronger yen. Dollar yen 116. Pound dollar under 140, under 141, and from there we had a better mood. BOJ talking about action, pound recovering. We went all the way up to 170, very strong and round number there. Currently we're at support, close to support. Sorry, not that close. Support is at 166.20. Okay, lots of pips in this pair. Okay. Yeah, no influence from Draghi's speech yesterday. Was disappointing. Maybe he's talking too much. He had the right decision on Thursday, public appearance in Davos on Friday, and yesterday we heard that we had a speech from him in Germany, but nothing that moved markets. Of course, cannot skip oil prices. Currently, they're falling 1%. Yesterday, they had an even bigger fall during the US session. So look at this roller coaster in terms of percentages. We were above 32, and now we're 29.44, close to the lows of the day. 27.50 is sort of the recent low. and yeah, S&P futures also down. But for this morning, for European mornings in general, sort of the opening tone sometimes comes from the closing tone in Chinese stocks, and they fell 6%. Gloomy mood began yesterday, it intensified today. Stronger euro, stronger yen, and weaker everything else. Okay. Yeah. Let's talk about events that we had yesterday. As mentioned here by Fabian, nothing happened from Draghi's speech. So let's begin from the top. IFO, German business sentiment missed on all fronts, on the current assessment and expectations on the business climate. This shows that German businesses are a bit worried about global growth, about China, perhaps about refugees. We didn't hear anything specific about that, but in general, they're more worried than they used to be, more worried than markets had expected. Perhaps this also contributed just a bit to the sour mood, but the sour mood was mostly seen in the US session and in the recent Asian session. Draghi didn't say anything new. For those trading the Kiwi, New Zealand credit card spending was A-okay. And we have lots of speculations, as I detailed before, about the Bank of Japan, and we'll detail a bit more about the Fed soon. Let's see if we have more questions. Where can go to know about these Chinese stock markets? Is there a chart like S&P for US markets or Nikkei for Japan? Well, good morning, everybody. Yeah, I'm trying to look for that chart. It's the Shanghai Composite. Let me try to find that. SSE Composite Index, or SH. Let me try to see if I can show you this chart instantly. If not, SSE. This doesn't look like that. Anyway, I'll try to get you the Shanghai Composite Index. And anyway, another question here. Do you still see the move in crude as a corrective one? You're talking about the recent recovery, I guess. So the recent recovery, yeah, it looked like a very nice correction, a huge correction. Yeah, okay, went up all the way from 27.50 to 32.50. That's $5. That's over 15%. But yeah, but remember that the situation in oil prices goes like this. We have everything playing against oil. Okay, we have just too much basic economics, too much supply, not enough demand. On the supply side, the reason for the recent slide in oil prices, I mean, the bigger picture since 2014 has been the shale production in the United States since 2010. It began rising. The US managed to produce more. Higher oil prices meant that it was already worthwhile exploring difficult places to find oil, the fracking, the shale, using different kinds of explosives, the water. Anyway, it's terrible for the environment, but it made economic sense. And these methods became also more and more efficient. Now, the Saudis, especially in November 2014, said in an OPEC meeting, look, we'll continue producing. Oil prices will fall, we'll maintain our market share, and the others, especially the expensive US shale industry, will suffer. Okay? We thought that in Russia, due to bad infrastructure, they'll begin producing less. Okay? What happened is everybody's producing a lot. OPEC members want Saudi Arabia to cut in order for them to have higher prices, but they're not ready to cut. Russia, actually, despite bad infrastructure, continued producing a lot of oil. United States shale industry became more efficient. All in all, there's just lots of oil. And the recent blow, the most recent one, came from Iran. It was not unexpected, but because we had an agreement with Iran and the West in July, but now the sanctions are lifted and they're free to ship oil, and they already have customers lining up. We don't know the extent of Iranian exports, but we know that it's cheap oil, cheap to produce, and there are already lots of tankers outside in the Persian Gulf just waiting to sail away with that oil and to flood markets. On the demand side, we had less demand from China and more from India, perhaps, but the global growth picture is not that optimistic. Okay, so it's sort of a mixed picture over there. So all in all, that's the big picture for oil. And we should note that if we see oil prices falling because of Iran, or more Saudi production, more shale production, it's not necessarily a terrible thing, because it means there's just more supply. If we see oil falling because of worries about growth, about demand, then it's more worrying. I see oil prices continue falling until we hear that production really falls, until we hear bankruptcies of U.S. companies, OPEC deciding to cut, even though I think there's a low chance, but there are talks about an emergency meeting from OPEC, something in Russia, in Norway, in Canada, in Brazil, in Nigeria. I mean, we have to see lower oil production in order for prices to fall, or reports of higher demand. Eventually, low prices mean higher demand, because you can afford to burn more oil, to travel more, to use more, to use cars that waste more fuel. But we need to see some kind of dynamic in the supply and demand, mostly supply change. Okay, so that was a long answer. Recent oil struggle out of Syria has been sold at 25. Yeah, the ISIS oil. Yeah, of course, one of the ways that this terrorist organization, Islamic State, or ISIS, or ISIL, funds itself is by using the oil fields in Syria and also perhaps in Iraq, and they sell it either to refineries or have refineries by themselves. And of course, because they're an illegitimate and organization, very cruel, a horrible one, they need to sell it for low prices. But there are also people in Turkey, in Iraq, in Iran, in perhaps Lebanon. I'm not sure about all the details, but someone buys the oil, and eventually not all the oil is for internal consumption within the territory controlled by Islamic State. So there is some kind of collaboration. Someone benefits from this cheap oil. In terms of production and in terms of impact on the global oil markets, this blood oil, if you wish to call it, this terrorist oil, is not such a huge impact on oil markets. So if now the West or in Russia, I don't know, if everybody goes to destroy all the oil fields that ISIS controls, this would not lift global oil prices. Okay, it would choke Islamic State and would have more significant impact. It would also hurt the people there, the population under the rule of Islamic State. So there are also dilemmas over there. But I mean, it has political implications, significant ones, but not on. This oil from ISIS is not the tipping point in the global oil glut that we're currently experiencing. Well, that was a long talk about oil. Let's see if we have more questions. I see a red line in all economic data globally pointing at a temporary decline. Yeah, lots of figures are negative, especially the manufacturing sector. Do you think pound yen will mirror the oil decline going forward? GJ is pound yen, I assume. Correct me if I'm wrong. No, I don't think it reflects the oil, only oil. Of course, there is a correlation. When we have a better atmosphere in markets, we have higher oil prices, higher pound, and this goes together in the weaker yen, and the other way around. But I don't think it really mirrors this one-to-one. CAD and oil are more correlated. GU. Sorry. Pound dollar. Yeah, pound dollar. I would say, but pound yen has a better reflection, but the best reflection is, of course, dollar CAD. Now, regarding pound dollar, I don't see clear correlation between. Yeah, also here the pound is in the risk camp together with commodity currencies, but and it falls together with oil, but it's not, I don't see it mirroring it, okay? Canadian dollar is a much better mirror of oil prices. In the UK, we have so many other factors. For example, what the biggest fall last week came from Mark Carney from his speech, and it didn't come hand in hand with oil prices. Yeah, it's falling under 142. Further support is 141.25. We've already seen levels under 141. Now we're in a doom and gloom atmosphere, so we have quite a significant fall there of over 60 pips today on pound dollar. I think we could have even more until we hear something soothing from the Fed. Okay, that's also a big topic I want to talk about. So today we don't have any figures from the UK. We had figures last week which were actually not too shabby, okay? Last week we heard from the Fed, from the UK that wages, they dropped, their pace dropped, but they were as expected. Unemployment rate fell to 5.1%. Inflation actually ticked up, but the Bank of England told us that it's not the time to raise rates, painting a very dark picture on the global economy, on China, on Eurozone demand, and you name it. Okay, so that's what's sort of going on, and that's hurting the pound more than anything else last week. And then when we had an improvement in mood, when stock markets went up, we had it go up, and that was, of course, strongly correlated with the fall in oil, with the rise in oil prices. Okay, so I hope this answers the question. Anyway, the lines here to watch here, 141.25. On the downside, let's look at this, 140.80, and the top side 143.50. Okay. Sorry for missing that letter and answering on pound yen instead of pound dollar. Anyway, what do we have today on the agenda? We have Mark Carney talking again. No UK figures, but we have Mark Carney talking again. It's at 10:45 GMT. It should be interesting because last week he killed the pound. Let's see if he can do it once again, or if he'll be a bit more optimistic. Carney has this skill to confuse markets. He sounds very determined, and he sounds like he knows what he's doing, but he managed to confuse markets more than once. Sometimes he said, well, I was just talking on my capacity, sometimes on the collective wisdom of the whole MPC, sort of explaining his mood. Okay, then we have a few figures from the United States of America. US case chiller, HPI. I think it's important to watch here the year-over-year changes. Oh, maybe we'll talk about a few more events we had. No, it's not that important. Yeah. So, yeah, US figures. Why don't I have it available right here? Just a second. Then we have the Case Shiller price index, which is, of course, it showed some kind of 5% year over year. Let me show that. Okay. So Carney speaking. Yeah, Case Shiller HPI rose 5.5 last time. Now it's expected to rise 5.7. All in all, a healthy rise in home prices, not a bubbly one. Month over month, we're expecting 0.4. At a quarter to 3 GMT, quarter to 4 here in the old continent, the market services PMI, the non-manufacturing sector, the bigger sector in the United States, which is still growing nicely contrary to manufacturing, a small drop from 54.3 to 54 is on the cards. Then we also have the composite together. And I think the most important event for today is the forward-looking figure of consumer confidence, CB consumer confidence, the conference board's number. No changes expected, 96.5. We've seen the University of Michigan's figure tick up. It's a figure for January. It's supposed to reflect consumers' intentions for this month. Okay, so let's see if it's really if it tells us that consumers are more confident because they have more gasoline, a cheaper gasoline, more money in their pockets, or they're afraid of terror and I don't know what, and they're ready to spend, not ready to spend, or actually that they don't have high-paying jobs. So that's sort of forward-looking indicator. The Fed might look at this as well. What else do we have today? We have, well, the Richmond Fed Manufacturing Index will probably be terrible, like any other manufacturing figures. Then during the night, we have the API weekly crude oil stock. It's sort of a preliminary figure towards the EIA figure, which is more important, but this provides us a hint. For those trading the loonie, it could be of importance. And for those trading the Aussie, we have a CPI, the Consumer Price Index. Most important one is the headline figure, not the core one, contrary to the United States, for example. So year over year, we're expecting it to rise from a pace of 1.5 to 1.6. That should be good enough for the RBA not to act. But who knows how they're going to interpret that? And it could be lower, like in New Zealand. New Zealand, we've seen lower figures for CPI, and that opens the door for rate cuts. Perhaps not tomorrow, but later in the year. So that's, of course, an important figure. Like in New Zealand, it's published only once per quarter. So this is actually the final release for 2015. We're expecting a small rise, but if we have lower inflation than expected, it opens the door for a rate cut as soon as next week. Actually, next week we have an RBA rate decision. Okay, let's see if we have more figures, and I'll answer the questions. No, we can have a question here. Thanks for sharing the chart. Yesterday's Lars session. How can I open it in? All right. Nice handwriting here. So this is the chart of the pound dollar. January 25th, 143.60 and to 145. Long, okay. 141. All right, so very nice lines here. It's a fib chart, right? Yeah, let's see if we have a move to the upside, breaking above this resistance, breaking above this downtrend. This is candlesticks. Yeah, thanks for sharing that. I think Wheeler will be dovish. One for crude as well. Let me take a look at that as well. Yeah, wow, very nice, very, very nice channel here in crude. Currently, this excellent charts shared there over at LAR. Dale Prinkert's excellent show. Yeah, very nice channel. I still see it channeling down if you wish. Eventually, it'll find some kind of bottom, but you know what they say about those picking bottoms. Not exactly a safe sport. Anyway, yeah, very interesting stuff here. GVP is from Rick Dinger, LAR member, excellent community. Dale has there as well. I see oil continuing a bit in a slide to the downside until we really hear that inventories are falling, that production is falling, that until then we'll have more screaming and shouting from Venezuela, from Ecuador, maybe from Nigeria, maybe from other countries, but the Saudis and Americans and the Russians will probably keep pumping oil at even low prices, and so will the Iranians. What are your thoughts about the effectiveness daily, weekly, and monthly pivot points of support and resistance? I look more at where the pairs stood on last time. Okay, so my approach in general is I look at fundamentals, what the things that really move markets, what central banks say, interest rates, GDP, employment, things like that, macroeconomics, and I look at where currency pairs stood, where they stopped beforehand as support and resistance line. So my approach to technical analysis is extremely simplistic. So I look if the pair found resistance at a round number. It's of course more important. If it found resistance or support more than once at the same level, it becomes more important. Things like that, but don't really look at pivot points. If I see a pair, I sometimes talk about a level which is pivotal. That means for me a level that I know the pair hugs the level. It used to be 120, for example, in dollar yen. Dollar yen always, each time it went a bit up, it fell towards 120. Each time it went down, it fell towards 120 and hugged this level. So I call this a pivotal line, but I don't look at what you refer to as pivot points, and it's not. I don't follow that closely. Okay. Anyway, more questions? I want to talk a bit about the Fed. Because if we look at the events, yesterday we had Germany and Draghi, but it's more moods on markets, oil, China, and things like that. Today we have Carney and US CB consumer confidence, and tomorrow is the most important day of the week, the Australian CPI, oil inventories, but most importantly, the Fed decision. Okay, I've been reading a few analysis items today about the Fed, that many expect the Fed to go dovish, to join the Dove Fest. Carney said it's not time to raise rates. Bank of Japan is ready to act. European Central Bank Mario Draghi was very dovish, talked about action in March. Even the Bank of Canada, that did not cut rates, said it was sort of on the verge and it was sort of stopped by the government, waiting for the government. Okay, now with the falling stock markets, the fall in oil, the Fed does care about stock markets. The Fed can find negative points in the US economy. There are plenty: retail sales, manufacturing, forecast for growth. The recent snowstorm in the East Coast also provides a reason for not raising rates. On the other hand, the Fed's mandate, inflation, core inflation 2.1, above the target, and employment, the jobs report was excellent. But the big question is, does the Fed look at, is it data dependent? That means the current data, and says, okay, things are going as planned. We're watching the world, we're watching China, but we're in general optimistic. Or does it say, okay, employment and inflation are still enjoying the benefits of growth seen in the past? They're lagging indicators. The situation actually now is getting worse. That will eventually hit employment and inflation. And they gave us some hint about not hiking in March. Analysts that I've read, SCB, BNP Paribas, and I think another bank, they said that don't expect the Fed to be too dovish this time. Of course, one of the reasons is the Fed will not want to lose its credibility. Anyway, they're probably going to do some kind of balancing act to acknowledge the weakness in the global economy, but also leave the door open for a second hike in March. Remember, there's no press conference, no new forecasts, no changes expected. The big question is, what will they do in March? And we will still be talking. We will not get a full answer, that's for sure. The big question is, will we get sort of a hint towards one direction or the other? So that was another Fed preview for you, because the talk about the Fed is getting louder, and next tomorrow, of course, it'll be the main event. Questions here about EuroAuD and EuroCAD. Yeah, the safe haven Euro VS versus the other currencies. Start with EuroCAD, 155.35, moving up, stronger euro. Since yesterday we had the Draghi effect, which was the last of the central banks to go dovish, and then we had euro dollar fall from the high. EuroCAD fall from 161 all the way here to, maybe this would be a better line here, at 152.40. Since then we've gone up 155.35. We're currently at resistance. The pair really nicely stopped at this line here, 155.60. That was resistance here, so it's a very nice line. Also support right here, and now it's stopping at this line once again. Let's add more lines to the top side. We have this round number, which was, well, more work, better as support than resistance at 157. Okay, that's the next line, and further resistance, 159 perhaps. Anyway, I think that this trend of doom and gloom could continue. That means lower oil prices, lower Canadian dollar, stronger euro. Okay, until at least we hear from the Fed. If the Fed goes dovish, then the mood improves and the pair is set to fall. Stronger stocks, stronger oil, stronger commodity currencies, weaker safe haven euro. Until the Fed, I think we could see a bit more room to the upside. Okay, more or less the same logic applies for me to Euro Aussie. Also here, the same trend. Euro fell from the highs, found support here. Very nice technical pairs, these ones. 153.35. Thanks for pointing them out. Look how the pair found this double bottom here. And we can almost see a double top here at 160.75, or perhaps a lower high if you wish. Anyway, currently the pair settled above support here at 156, moving a bit higher. Also, the same goes for here. Perhaps a bit, the moves here are a bit more moderate, with the Aussie doesn't move as strongly as the Canadian dollar does. The ups and downs are more limited. Anyway, these are the lines to watch. Another great technical pair. Also here, we could see a bit more room to the upside until we hear something from the Fed. But more specifically for the Aussie, watch out for the Australian CPI. If it goes like the New Zealand CPI, we could have further rises because it was negative in New Zealand. It could be negative in Australia, implying the rate cut from the RBA. Okay. Question, what's up with Greece creeping back into the headlines? Yeah, I'm following that. I didn't mention it. The big elephant in the room for Greece is the debt. Debt relief. They were promised some debt relief, but the European authorities are playing out with them. They said, we will not talk about debt until you reform the pensions. And when they talk about pension reform, they mean more cuts, more than a real reform. I'm very frustrated with what happened to Greece last year, as you can imagine. And I think this one thing is clear: Greece will have another crisis in 2016. Even if they surrender, and they did surrender on 99% of stuff, even if they surrender on everything, the program is just bound to fail. The program was made in order to deter Spanish voters from voting for non-mainstream parties, for Podemos. You could still have a left-wing government here defying the logic, but we don't know. Anyway, Greece is still an issue. Remember that for the euro, if we have trouble in Greece, it could mean a stronger euro on safe haven flows. Doesn't make sense, but that's exactly what happened last year. The safe haven, money goes into the safe haven, even if the haven is the port of Piraeus and not necessarily trouble in China. Okay, we'll talk about Greece perhaps a bit more in another show, more in detail. See more questions here. If the Bank of Japan fails to act, we get some bad data out of Kiwi. On Thursday, we could be in a great trade for Kiwi yen. That could be interesting. The Bank of Japan acts on Friday, and New Zealand, we could hear something dovish from New Zealand, but probably not something. They will probably not cut the interest rates because they could wait, because the Kiwi did weaken quite a lot, and they just said recently that they hinted that they will not cut rates. Of course, since then the situation deteriorated in the world, but I'm not sure. I don't think that. Yeah, the Kiwi. Well, it's Thursday in New Zealand, but Wednesday here in Europe. And for the yen, it's Friday. The Bank of Japan. Yeah, Kiwi yen has been a great trade before the financial crisis, the famous carry trade, until it all crashed. Currently level 76. We're currently at 76, which is some kind of support. Well, so 75.80, resistance 77.50, and strong support at 73.67. Yeah, if we have a relatively sort of stable RBNZ and the Bank of Japan really acts, we could have the pair shooting higher. But there are also doubts about the Bank of Japan, there are so many unknowns about these three central banks, the Fed, the RBNZ, and the Bank of Japan. it'll be a very exciting week. Of course, the Fed is the most important one, and surely Draghi and Yellen are chatting behind closed doors. Yeah, I'm sure they are behind closed doors or just on the telephone without anybody listening. I'm not sure the central banks are really coordinating, but they are in touch. That's for sure. Okay. There was a figure say Brexit will affect 2% of the euro GDP. Maybe. I think that eventually the Brits will vote to stay in the EU despite all the trouble going on in the European Union. So yeah, the uncertainty already has an impact on the pound, weighing on the pound a bit, adding to the negative feel to the pressure on the pound. And what I've heard recently is that perhaps we'll have the European Union say something about limiting the number of refugees coming into the European Union in March, and that could help David Cameron win a referendum somewhere in the summer or the autumn. But it's still early days about all this. I believe my forecast for 2016 is that we'll see more pressure on the pound throughout until the referendum, and after this uncertainty is gone, we could have a change of direction and not only a correction but a stronger British pound. I said regarding dollar and weekly forecast and forex exchange and articles dedicated to major pairs, you do a great job outlining the main events of the week related to the currency paired with, for example, your dollar forecast estimates. But I've noticed there is no article list of events for dollar currency this week. As a constructive feedback, I would suggest to publish also the list of events of dollar. Okay, I have one general weekly outlook for the major events, and this focuses more on US events, but perhaps a separate list only on US events would be useful. Another comment here, forget Greece, Italy banks have huge hidden problems, and NPLs, non-performing loans, are worse than Greece and worse than any they admit. Monte dei Paschi is one of the worst ones. Bailout Italian banks, that's a great time to see nice trades. Take short euro. I'm also worried about Italian banks. I'm worried because this could have an impact even on me personally as a holder of a Spanish bank account. And the best thing is just to spend the money, I guess, and not have too much money in the bank. But regarding the effect on the euro, it could be different. Okay, it could be we could have trouble in Italian banks bubbling higher, not staying on the background. I mean, inform people like you guys or watching Greece, watching Italian banks. I'm watching also Spanish politics. Anyway, but it's not in the headlines. Once it reaches the headlines, things become much worse, we could actually have you can actually have a positive reaction from the euro on the safe haven flows. Okay, so it's not necessary this way. If the reaction will not necessarily be euro negative. Okay. Also, weekly forecast items indicate the events are going to affect the major currencies would be highly appreciated. You can see some already presented the major pairs forecast. This would be forecast for dollar, euro, 1 for yen. Okay, thanks, Fabian. Brexit, it's about giving people the illusion that they can vote their destiny, but never in a million years will the Queen or Rothschild let the peasants control destiny. Well, I think democracy is relatively strong in the UK. But it also has its limits. Okay. So let's take another look at euro dollar, more or less where we started the show. A bit lower, a bit higher. Anyway, it's time for the wrap up for today. Just before the wrap up, let's look at the implied probability here for countdown to the Fed. And because I talked about the Fed, more or less like in the previous days, around 2/3 against a rate hike, the probability. Okay. This is a live market open wrap up for today, January 26th. It's a Tuesday. The mood has dampened in markets. Weaker oil was the leader, then weaker stocks, especially in China with the Shanghai Composite crashing over 6%. That means weaker everything, commodity currencies, pound, everything basically except the euro and the yen. Events yesterday didn't really move markets. IFO was negative but didn't move. Draghi didn't say anything new, but there's lots of speculation about the Fed and the Bank of Japan coming tomorrow and on Friday respectively. Eurodollar moving up in range, safe haven flows. 107.80 establishes itself as even stronger support, double bottom, resistance 109. Pound dollar falling below 142, support 141.25 and 140.80, resistance 142.40 and 143.50. Dollar yen, safe haven flows pushing the pair lower, the yen higher, 117.91 current level, 117.30 and 116 support, 118.30 and 119 resistance. Dollar CAD falling, Canadian dollar falling with oil prices. It was seen more yesterday than today. 143 already 2 cents above the lows that this pair experienced last week after the Bank of Canada did not cut. Further resistance 144.40, 142.25 works as support. Aussie dollar pressure to the downside alongside Chinese stocks, 69.44 current level. 69 is some kind of support, 68.30 really strong support, 70 and 70.65 to the upside. New Zealand dollar looking a bit stronger in comparison to the Aussie, but also pressure to the downside. 64.46 is the current level. 64.25 is support. 63.50. We have a rate decision in New Zealand tomorrow. In terms of things to watch out for today, we have Mark Carney speaking, Governor of the Bank of England, at 10:45. Let's see if he hits the pounds the pound once again. Okay, he did that last week in a spectacular manner, saying that it's not the time to raise rates. Then we have a few US figures. The most important one is CD consumer confidence. Are consumers more confident because of falling gasoline prices, or are they worried about, well, everything? And before that, we have house prices and the market services PMI, not the ISM one, which is more important. And for those of you trading the Aussie, in the middle of the night, we have Australian CPI released only once per quarter, critical for the RBA decision, critical for the Australian dollar, expected to rise, but we've seen in New Zealand that prices are pressured to the downside. So this could be also Australia's fate in terms of prices. Not necessarily bad for consumers, of course. And of course, the tension is mounting towards tomorrow's Fed decision. We don't know if the Fed will join the doves, hit the dollar, give us some soothing words that it's not going to hike in March, or hint about that, or if it's gonna be hawkish once again, keeping up the optimism about the US economy. I don't think it's going to be one extreme or the other. It's going to be a mixed, blurred message, a fine or not so fine balancing act. Okay. So you have more questions here. Euro is extremely tricky at this time. It seems to me really, no one really knows where it's going, and just to stay away from it. Yeah, it's very, very tricky because of the safe haven flows. On one hand, supporting the euro, Draghi's words, promise to act, hitting the euro, speculation about the Fed. In general, we're still in tight and frustrating ranges. Draghi managed to push euro-dollar out of range, but it never went too far. And we're still trading most of the time at the 108 handle, okay? So yeah, it's tricky, and eventually it'll break, but we're still not seeing the big break. Okay, at least we have a small extension of the range to 107.80. Carol says, as a peasant, just to let you know, the Queen has no say. It's Cameron and the people. Okay, yeah, it's Cameron who was re-elected last year. So yeah, I must say that people here in Spain envy the British democracy a lot. Okay, so it's far from perfect, but I'm living here in a country that suffered a dictatorship until 40 years ago. There's still many people who remember that, and the Civil War has still open wounds, and the British democracy is looked up to. Okay, another comment here. Hitting the doves, we might end up with the pigeon poop in our heads. Yeah, remember also the hawk's poop, so it goes both ways. Let's see if the Fed joins the Dove Fest or not. Okay, I want to see the Queen in August, but she had her bullies waiting for me. Oh, what's that? Oh, yeah, I would call that normal security. I've seen worse security guards. Okay. Anyway, that's it for today. Gloomy mood in markets. That means opportunities on safe havens. I suspect this might continue until the Fed tomorrow, but you never know. Sometimes you have comments, leaks, reports, and just mood changes. We're also close to the end of the month, which will have a bigger impact, of course, on Friday. Some rebalancing acts for portfolio managers. Anyway, I wish everybody happy guns friendly guys. Yeah, I wish everybody a safe and successful trading day. Thank you everybody for coming. And we'll be here tomorrow, as usual, doing a longer preview of the Fed, providing some scenarios, and maybe talking a bit more about Greece if we have time, because our Italian bank stories I've been following but haven't detailed here in the show too much. Okay, so thank you very much, everybody, and see you tomorrow. Bye-bye.